Sup traders, it's Wednesday 24th of September. If you look at what I was talking about yesterday, I was expecting some bearish momentum, but I wasn't sure how deeply price was going to pull back, especially on the euro dollar after seeing those two bullish candles on Monday. And as I was doing my post-market analysis yesterday evening, it looked like we were closing bullish. I just want to point something out on this, on euro and pound dollar, which I'm noticing on the lower time frames. We had a very strong SMT on the daily time frame at a key level, going into, after a very long extended bullish run, we had these SMTs, and then after that we started to see price push lower. So that's just something I wanted to point out, because I'm going to talk about SMT on the lower time frames. Euro dollar, like I was saying yesterday, we might actually close above this bearish fair value gap, which is going to trap a lot of buyers into the market, because we are in a bullish order flow, and we had this market structure shift. It's a pullback. We've closed above the bearish fair value gap, the bearish inverse fair value gap. People are expecting price to continue higher. So, but for me, because we've rejected quite a key level at quite a extended period, after such an extended period, I was kind of expecting price to close above this and then start to move lower. Not sure, we've just seen one bearish candle. Are we going to see multiple bearish candles in a row? I'm honestly not sure. But at the moment, this bearish displacement on the euro dollar, we had this SMT on with pound dollar yesterday around these levels, and then displacing with such a strong momentum. And at the moment, we've got the opposite SMT with GU, because GU has made a new low. I'm expecting, or I'm predicting, price to pull back into this range somewhere in the 1 hour time frame. Maybe I'll find a better entry somewhere right along these highs. I do think price could come up even around here on the 4 hour time frame. You would have a better view of where I would want price to come into this fair value gap. Ideally, 50% off that fair value gap would be a very good area for price to come into. I was saying yesterday, my order flow, especially on pound dollar, which I'll go over, is bearish, and normally I like to be aggressive and trade on a pullback after seeing a strong pullback, but I was expecting much deeper pullback than that. I was expecting price to come into this inverse fair value gap. Maybe I was expecting too much from the price. We had this retest at this low, which price found liquidity Monday morning, displaced up, and after seeing this displacement, I was predicting maybe we'll accumulate around here for a bit and then push up one more time before finding resistance and then dropping lower. But we found resistance before then. We had SMT. There was a market structure shift on the 1 hour time frame after a channel. Like I say, channel is a setup that I like to trade, and that's a channel right there. I just wanted it to be slightly higher up here somewhere, which would have been better for me, but that's fine. I don't mind price displacing lower. This SMT followed by displacement lower, which is something to note. A pullback. This happened during London Open, by the way. So London Open pulls back. There was just no room for pullback. I would have expected price to pull back into this fair value gap. Nothing. Price gave me nothing. It did pull back into this fair value gap after, but to me, this is way too late during the day and very close to this sell side liquidity. We could just find support and pull back, and I'd rather wait for that pullback than aggressively trade around that level. But even better, it's best to wait for that 50% of the range to be tested, which happens to be right above that fair value gap. However, if you're looking at the 1 hour time frame, and even in the 1 hour time frame, it does that does provide a much better opportunity in terms of risk reward as well. So ideally, I would want price to come into the start of at least the first fair value gap, and it does depend on how price reacts down here. For me, if we start to see something like this, then it's more likely that we're going to push all the way up to these highs after grabbing and generating liquidity. But if it just goes straight up, then I would have to reassess how price is approaching my point of interest. But until then, let's see. Ideally, I'm going to wait for price to come into that 50%. It depends on how price closes tomorrow as well, or tonight. It does look like it's closing bearish. ideally, you know, we haven't taken out this low, but we've got SMT with GU on that low, so that's something to be mindful about. We might just, you know, push up and I'll push into this fair value gap, and I would much rather trade there than trade somewhere just over here. You know, gives me better risk reward, allows me to put stops above those highs as well. Pound dollar is the one I've been bearish all week after seeing this bearish engulfing candle. It's with SMT now, looking in hindsight, after taking out quite some key level and also rejecting this daily time frame fair value gap. I was expecting price to be bearish this week. We got the pullback, you know, on Monday and Tuesday. I was predicting price to pull deeper into this 50% off this range, or at least the start of the second fair value gap, because I don't really just want to be trading at such a first fair value gap. And maybe that was, although, you know, I would rather wait. I don't have any regret in not taking any trades around here. I took a trade on Monday morning, you know, as price came up to this high before the fair value gap was even tested, after this accumulation and then manipulation. Idea good, level not so good. And that's the kind of, you know, taking that trade here would probably have been a better trade at this 50% level. Could have had my stop, woulda, coulda, shoulda. Let's not even dive into that, because I don't really want to trade that. I was expecting price to come up to, you know, the start of this fair value gap. It didn't. It started to display slower before it could even get there, and that's just what it is. I'm not really concerned about that. And I did see this liquidity grab yesterday after I did my analysis, and I thought, okay, maybe now we're going to see price push higher, because, you know, it's a liquidity grab. If we're going to push higher, then it's going to find some bullish momentum. And after they're not seeing that, as price started to close down, that's when I knew, okay, we are going to go lower. And to me now, again, I expect price to continue lower tomorrow, at least. You know, at least if we get a pullback, at least down back to this low or to this low. And this is better for me than euro dollar. If price pulls back to the 50%, which happens to be just above this fair value gap, it would be a perfect level to go short. But it also depends on how the Asian market reacts. And what I'm seeing right now on the 60-minute, you know, price came down, put in this bullish candle, put in this two bearish candle. It's trying to push lower, right? And it failed. And then it's put in a bullish candle again. And then it's going to try, I don't know, got 2 minutes left. Okay, that's a bearish candle. What's going to happen? Is it going to push lower, grab liquidity here? Is that going to give it some liquidity to push it up into these highs? Hope so. If that happens, then let's go. That's what we're doing. So we got the liquidity grab, right? 1, 2, 3. Bearish leg, market structure shift. Now give me that pullback. Honestly, I'm happy to even just take this trade right like this. I think that's a pretty decent trade. But I'm going to wait till tomorrow morning to see what's happened down here. If it's just chilling and trading around here, I'll be putting my entries there, stops there, target there, and that's a 1.3 hour trade for tomorrow. So let's see how that plays out.